What does the reaction off of a level tell you about the follow through of that level? We're going to talk about that today and more on today's Market Brief. Good morning, everybody. Welcome to today's Market Brief. I'm your host, Chuck Fulkerson. Hope you guys are having an absolutely amazing day. One of the things I want to touch on very quickly is the reaction to a level and how the market moves away from a turning point. And that follow through is an important aspect, because if the follow through on a level does not send you to new highs from the standpoint of a demand, or to new lows from the standpoint of supply, then that tells me that that level itself was not a strong reversal point. And we're going to take a look at one of those today. You know, what we're essentially taking a look at is what's the follow through after something happens, right? You know, if you're a baseball player, if you're a golfer, you know that once you've taken that swing without a solid follow through, it's just not going to go and carry as far as you expect it to. Well, the same thing happens in the markets. If we don't get a follow through on a reactionary move, the markets typically tell us that the order imbalance we expected was not as big as we would like it to be. And so we're going to look at an example of one of the levels that we looked at in one of our live trade rooms this week, so that you can see kind of what I'm talking about in this picture. By the way, if you're new to this channel, please hit the like button, hit the subscribe. It really helps the channel out. I look forward to teaching you more about how these markets operate. Okay, let's go ahead and take a look at the charts. So here is a chart of the S&P 500 futures market. Now, in our live trade room on Sunday evening, we identified what was a pretty high probability turning point, and it was this area right here. Now, for those of you that are unfamiliar with this term, we use the term wick over wick. This is a wick over wick level. I'm going to zoom in on that a little bit so you can see it a bit more clearly. You notice that we have an upper wick on this candle, a lower wick on this candle. But that's not really what makes it a really good turning point. What makes it a good turning point is that it's a wick over wick level just above a pivot low. So essentially what we're seeing here is that we've got this pivot low in price, where price dropped, turned around, and rallied up. But a little bit of this wick over wick area here just above that pivot. Well, that sets up for a really good turning point. And the market yesterday morning came screaming down into this level, giving us a potential for an entry. And price did give us a pretty decent move away from that level. Matter of fact, we got a pretty good move away, but I'm using the word pretty good. And the reason I'm using the word pretty good was because this level did not have what I would consider follow through. And true follow through would mean that it would get above this prior high. And a level that does not create a new higher high after a good bounce off of that area tells me that the strength of this level is minimal at best. This is a very, very weak level where there was not a tremendous amount of supply and demand imbalance. Now, this gave us time to look at it, maybe take a little profit off the table, and then essentially move our stop to break even, or close it out for a little profit, because I think that the next time we come into this level, it is destined to fail. And I think it's destined to fail, and there's two clues that tell me that. The first clue would be that when we came into the level, we penetrated the level by greater than 50% of depth. By getting in greater than 50% of depth, that tells me that there's not a tremendous amount of imbalance. The second clue is that we did not create a new higher high. By having an inability to create a new higher high, there is no true follow through in that level. And as I look back a little bit on the S&P, those are some of the things that I look for when I identify the strength and quality of a level. Is, does it have follow through that's going to keep the market from going in that trend direction, or is this going to be something that just doesn't hold longer term? Now, that area here in the S&P is a level that gave us very minimal follow through. and I want to see follow through in a quality level in order to see a trend continue. Well, that's good on an hourly chart to take a look at, but let's take a look at it on a bigger picture, like say a daily chart. And when I look at this thing on a daily chart, I'm going to use this one here as my example. And I'm going to use this level right here as our example, because if we notice when we came in to this level, we hit this level and bounced away. But when we did that, we were able to get above the high over here to the left, right? This high right here. Now that means that once we bounced off of here and cleared this high to the left and this high right here, that told me that this is a very, very strong area, likely to see a potential return in price. And if we do return back to here in price, to me, that would be a very strong buying area, because we should see a second bounce off of this level. Now, let's say that we do return back to this level and we get something like this where price comes back down into this zone. And my expectation would be that we would not come straight down into this zone, but let's say that we come back down into this level and we get some sort of a move like this. My anticipation is that we would get a bounce out of that level. But in order for that level to have any validity for longer term, we would have to get above this pivot in order for it to be effective, because it's very possible that we could hit off of that level and get a small bounce, and that would then show me deeper failure of this level because of the lack of follow through. I would then be a lot more bearish in my pricing decisions, expecting price to fall from this area. So that's it. That's follow through. If you have any questions on follow through, send us an email, support@TradersArmy.com. I'd love to hear what your thoughts are on follow through. Or feel free to join us at one of our trading rooms. We actually have a free preview week going on right now. Go to TradersArmy.com, sign up for a free membership. We've got about 8 more trading rooms left this week, it feels like, that you can join in and see what we do and what we're all about. But until next time, everybody, I'll talk to you soon. See ya.